Welcome to the FD webinar, everybody. My name's Ali. Today is officially day 93 of lockdown, and I've had to volunteer for this gig to escape my house. It's been a challenging time for everybody, and I hope your families and businesses are all okay. A little bit of housekeeping before we start. I'm told the chat function is obvious, so that's how you can chat to us, that's how you can ask any questions you've got. If we haven't covered anything, drop it in there and we will do our best to cover it. So I'm Ali, I'm a relationship partner and I work within the audit team. And I'll be joined by Steve, who's an IT partner. He'll be talking to us about remote working, and we'll be joined by Philip. He'll be covering all things tax, but just some other voices that you may very well hear. We've got Mark on hand and he'll be helping us out with questions. And we've got Steve on hand and he's covering off the tech. So I'm sure you'll hear from him. Hopefully he'll tell me that he can hear me.
Yeah, we can hear you fine.
Okay, so we can dive right in, I think, starting with audit and accounting. And I want to talk to you about three things. I will disappear, so I'll come back, but I will disappear so that I can relax and dive into some detail, and I'll share some slides with you. So hopefully you can see some slides. So audit and accounting, three things to cover: accounting implications of COVID, going concern and its impact on audit reports at the moment, and auditing remotely. So let's ease our way into this. The first thing is filing extensions, and they've been termed automatic. Well, I guess I'm about to tell you they're not as automatic as they look. You have to apply. What's automatic is if you apply, then you will get a 3-month extension as long as you have not already passed your filing deadline. It's quite straightforward to do on Companies House system, and the response and confirmation is pretty instant, only a few minutes. And I'd suggest if you're not sure now whether you'll be able to file on time, that it's probably best to get the extension and then either take advantage of it or file as you would have within your normal filing window. So the message is it's not automatic. You won't just get your 3 months. You need to apply for it, and then you will just get your 3 months. So let's have a look at COVID and whether or not it's an adjusting event or whether it's a non-adjusting event, but something that you would definitely be disclosing. So December 19, there was definitely something happening in China, but it wasn't until March 2020 that it was declared a global pandemic, and the 23rd of March that we went into lockdown. So if you've got a December 19, January, February 20 year end, then generally I think it's a non-adjusting post-balance sheet event, one where undoubtedly there will be disclosures and you will be talking about it, but not one where you will be revisiting the numbers. That said, there is a little bit of a caveat coming. If you are heavily reliant on China and heavily linked, then I would say that's probably one to think about. But March 2020 year ends onwards, then COVID had definitely arrived into the UK and Europe. So let's have a look at what that means for a March year end. So we use conditions at the balance sheet date, and then we would use those to review and check recoverability in essence. So starting with property and fixed assets, reasonably straightforward. Investment property is usually carried at fair value, and in essence that's market value. So right now there's a lot of uncertainty around market value, and probably if you haven't had a professional valuation for some time, it might be worth testing a sample or all of your valuations given the level of uncertainty. Then if you've got assets held at cost, you would need to look at impairment reviews. So if you're incurring losses, then that's probably an indication of impairment for property, plant and equipment. Fixtures and fittings would need to fall into that. And when you're undertaking an impairment review, it's fairly complex in that you need to look at cash flows generated from those assets. So I suppose what I'm saying is it needs some thought and it needs some planning. So definitely one to look at ahead. Intellectual property and goodwill, so intangible assets, so acquired subsidiaries or businesses that you've acquired. In essence, these are similar to the impairment test on tangible assets. You would need to revisit the forecast you had at the time and see how they've changed and consider if you've got an impairment. They're probably the two harder ones to look at. If we come on to stock and debtors, these two probably are a little bit more straightforward, but many businesses and sectors are likely to be affected when it comes to stock, because undoubtedly there was a high level of perishable items given we went into lockdown so quickly that didn't get shipped, and possibly excess holdings if you've got seasonal stock. So I think generally there is an expectation that stock write-downs are expected. Debtors is the same review as you've done before. If you're offering customers credit, then you need to assess their ability to pay. And I suppose particularly at the moment, because credit insurance is not available in the same way that it was. So in essence, balance sheet recoverability and revisit your assets. The fixed assets and intangible assets are probably the harder ones to assess. So let's have a think about liabilities and provisions. Events again at the balance sheet date determine recognition here. So any restructuring that you might be undertaking or have already undertaken, how much you had done and announced at the balance sheet date is the bit that you can accrue. So if you've not announced anything, then you can't accrue it into your year end, and nothing has changed with this. That's not new news to us. That's how it's always been. In terms of what you can include, anything that's direct expenditure really, so redundancy costs, consultancy fees, onerous contract provisions, definitely not though operating losses from the future, and definitely not any retraining that you might be undertaking of the team that you are retaining. But I should say that's not new news, that's just a recap of the old rules. Just a little comment on insurance. If you have got business interruption insurance, then you can only recognise this when you are virtually certain of receipt. And until that's the case, it's a contingent asset. So something you could disclose and probably would, but you can't recognise it until you're virtually certain of receipt. And if the certainty is post year end, that doesn't make that an adjusting event. You could disclose it, but it would still be a contingent asset in the accounts. You couldn't recognise the debtor. What I did notice, thank you to my client that shared this with me, is that the FCA are running a test case, and towards the end of July, it looks like they're expecting to appear in court, although I would say that is likely to result in a drawn out appeals process, I'm sure, but nevertheless, one to keep our eyes on. So yeah, that's probably the balance sheet. I know that was a whistle stop. That's probably your year-end balance sheet and a quick run through of what we need to look at. And what I want to do now is just have a look at all of the government support that's been introduced and how you should account for that. Firstly, one observation from me, there are a lot of long-winded names and acronyms, and I probably am about to muddle some of them, so apologies for that. I think the first thing is it's likely you will need new accounting policies for these, but of course we can support with that when the time comes. For now, I want to focus on how to account for them. So starting with the Coronavirus Job Retention Scheme, otherwise known as the furlough scheme. Undoubtedly, it's a lifeline for businesses right now. In essence, it's the government reimbursing wage payments that you've made. So they're providing you with a grant, you're not repaying it, and section 24 of FRS 102 is where we need to go. So you're not repaying it, so yeah, it's government grant. The receipt you would match with the associated payroll expense in terms of the timing, so match it to the month of the payroll that you've paid. That's when to recognise it. But in terms of where to recognise it, you wouldn't offset that. You would show that separately in the profit and loss account, probably as other income. In terms of practically, what I would suggest is a separate nominal code, and then it would be easily reconcilable, and you can then provide support to the revenue when they make their inquiries, which I'm sure is inevitable. And one thing I would perhaps point out is the retention of documents, letters, calculations. The revenue is saying that needs to be for 5 years. So I think it's inevitable they will raise questions on it. And so I'm saying put it in a separate nominal and make it easy to reconcile. So moving on to loans, there are various loans with various names. The ones I'm going to cover are those where in the first initial period, there are no fees or interest. And I say that with a bit of hesitation because there actually are fees and interest. It's just that your company is not required to pay them. They're actually paid by the government directly to the lender in the first year. You can see where I'm going with this, can't you? So in essence, it's another grant. You're not paying it. It's not repaid. But it's embedded in the product. You don't even need to account for it. There'll be no entries for you to make. You're not paying anybody. But what I would say is this quite a complex area of FRS 102, and there is actually an off-market rate of interest. And for the techies out there, that means you need to do a present value calculation as those future cash flows and then discount it. I'm not going to go into detail today because I think, in all honesty, unless you're at the higher end of the borrowing, which is a 5 million maximum on these loans, then it's probably not material. Probably, I say that with some hesitation, but it's definitely something to be aware of. It's a techie point. You may be able to do nothing, but I did definitely want to flag the auditors might be crunching some numbers in the background to assess if they think it's material or not. So at least you'll know what they're doing. Let's move on to grants, and I perhaps now should say that grants and rates, these are linked. So the Small Business Grants Fund and the Retail, Hospitality and Leisure Grant Fund, they are both aimed really at businesses reliant on footfall. So if you are you've got a shop front, or you're in a high street, you're in the city, in essence paying premium rates, then you are the business that this is aimed at. There is a clear list, and there's probably 30 different sectors on that list, but in essence, it's fair to say they're aimed at people with footfall. These grants, there are no performance conditions. So when you are eligible to receive it, that's the point that you should recognise it. So I think eligibility was probably towards the end of March when they were announced. In terms of where you would account for them, again, in other operating income, and you can accrue that probably before you receive it. One thing to point out, I think, is if you've not had your grant already, I would definitely be contacting the local authority, but there's a very clear list, and if you're not sure where that is, perhaps drop that in the chat box and we can definitely point you in the direction of that. Linked to this is the business rates holiday, and that one's pretty straightforward. It's just a reduction to the rates expense. The last thing on accounting I want to mention is any rent concessions. So if you've got a rent-free period, then that's like an initial rent-free period. You'd spread it over the remaining life of the lease. If you've had a holiday from any of your landlords, then that is simply a liability you're paying later if you've had a rental payment holiday. So you need to accrue that and then pay it later. One thing perhaps worth pointing out is time to pay arrangements with HMRC. These actually attract interest. So if you have taken a time to pay arrangement with HMRC, then you should be accruing some interest on those. Although the VAT deferral, the automatic VAT deferral, that doesn't come with any interest. That was interest free. So that's it on accounting, and that was easing into it. So now we need to have a little look at some auditing. So I just want to have a look at the disclosures we might need in accounts. as a result of the coronavirus and the impact we see on going concern. So as we know, it's a challenging time and there's lots of uncertainty. Assessing going concern is probably the #1 talking point right now between directors and auditors. So I did want to go through this, but let's start with a recap. You would use the going concern basis of preparation in all accounts unless you intend to liquidate or to cease trading, or realistically, you don't have any alternative. So you do use the going concern unless you're liquidating or you're ceasing trading or you don't have a realistic alternative. Okay, right. Before COVID, there was already going to be some stricter going concern rules for auditors. In September 19, because of a number of high profile failures, Carillion, Patisserie Valerie and others, needless to say, it was already in the spotlight and auditors were being asked to do more. And now we've got coronavirus on top of that. So let's have a look at the requirements of reviewing going concern. Firstly, no change to it being the director's responsibility to determine whether going concern is appropriate. That's how it was, that's how it is. And the period to review is 12 months from the date you expect to approve accounts. So not 12 months from the date you prepare your forecasts, 12 months from the date you expect to sign your accounts. So inevitably, you need to be forecasting for a period probably longer than 12 months. Then the requirement of the auditors is to review the assessment, which is inevitably going to involve a number of questions, and determine if the conclusion reached is reasonable. And in order for an auditor to do that, they will be looking for some evidence, hence providing forecasts and helping them walk through, or helping me walk through your forecasts and understand your assumptions. And that will be questions like, how do you know when normal returns in terms of levels of activity? And how do you know that it's 30%, say, less than normal activity? So it's just helping to provide confidence to that. Disclosure in the accounts will be key because users will need to understand how the directors have determined that the going concern assumption is appropriate. So in terms of where we'll see these disclosures, I think we'll see that in the director's report, in the strategic report, and in accounting policies. And it's probably in accounting policies where you would be saying most about the assumptions used in your forecasts. So to sum up, we prepare accounts on a going concern basis. If you have an intention to continue trading and that your forecasts support that. I think in the past, I suspect that directors have waited for the auditors to prompt the discussion for forecasts and going concern. And I think, to be honest, going forwards, that will be quite different. You will need to be more pre-armed. So let's have a look at some things to consider. You'll need to prepare detailed profit and cash flow forecasts. And I say for 12 months, but it's definitely 12 months from the date of signing. So I think practically it's longer than that. You need to record your assumptions made when preparing the forecasts, and you need to have built changes into those. So if there are margin improvements, if you have gradually increased sales as lockdowns released, if you have reduced costs, then those changes, I would be suggesting to commit those assumptions to writing. Once you've done that, I would be reviewing the forecast against headroom so that you can see if there are any tight spots, and if there are some tight spots, how would you manage that? What alternatives are there? I would be looking to gain confirmation as a director from funders. If you've got funding facilities due for renewal, then you should be talking to them early. And I would be documenting conversations, even if you haven't got to the point where you're at the point with letters offering the facility renewal. If you have got lending where that's required, then of course there might be covenants with those, and I would be suggesting that you test those in the forecasts to look forward for where you might have compliance issues. And if you then do, again, you can be talking to the bank ahead and be forearmed with that. So we need to document, in essence, the risk factors in the forecasts. then we should be sensitizing them so that you can look at some different scenarios and in essence plan for different circumstances to give you confidence for the next 12 months. You can then look at mitigation steps for those and have plans for how you might manage within your facilities. And of course, we can't forget the external factors. Brexit is still a topic that we need to be mindful of, and changes in legislation that might affect your business or new competitors, they all need to be thought through. Another thing to think about is how accurate has your forecasting historically been? Do you have individual managers within your business that consistently provide you with a budget that's more a target? Because forecasts for going concern, they need to be realistic, and they're not ones that are target forecasts. So in short, I think you and your directors need to be more alive to the whole issue and be documenting maybe what you did before, but if you weren't doing it before, then definitely documenting this. One thing to mention before we move on to the audit report piece is at the end of this slide, I've mentioned reverse stress testing, which is a concept the ICAW made reference to in some guidance, and I will share that in the takeaway from this document. I'll give you a link. Stress testing was something that we heard about during the financial crisis of 2009, mainly associated with banks. But in essence, it's looking at forecasts sort of on their head, where you look at the worst case scenario and see if that promotes a picture of trade that's sustainable. So in essence, keeping the lights on. So I just wanted to mention that because it gives you a different lens to look at going concern. But I'll leave you to look at that guidance. I almost want to say at your leisure. I'm sure that won't be true, but have a look at that. Right, let's have a look at audit reports. Firstly, it seems obvious, but the level of uncertainty in your forecasts and your trade will determine the audit report wording that's in your accounts. So let's have a look at some options. We kind of have a spectrum, and at one end we have a clean audit report, pretty much as we've always seen, I would imagine, in the majority of accounts. And then at the other, we have a disagreement of opinion, which is incredibly rare, really, really rare. And that's where the directors would, in essence, say the accounts are prepared on a going concern basis, but the auditor chooses to disagree with that. And I definitely want to say they're very rare. I don't expect to be seeing those. So let's start with a clean audit opinion. And I'll just run through what I think a scenario would look like in order for you to have one of those. So, of course, you would need forecasts, and they would need to be demonstrating that actually the business is relatively unaffected, that you have a business that's well funded and it can support overheads and fixed costs for the period of review, and there's a secure trading pattern. If you've done reverse stress testing, in essence, it shows you can keep the lights on and there isn't really any uncertainty around that. You would disclose in accounting policies why it's a going concern assessment with some narrative that demonstrates that there is very limited uncertainty. So let me give an example. You might have traded through lockdown. You've got some detailed forecasts that show a reduced level of trade is more than sufficient to cover the business for the next 12 months and its costs, that the forecasts don't include any of the government loan schemes that have been introduced. Of course, though, any length and depth of recession that follows, we don't know, and you might make reference to that, but as best you can as the directors, you see it almost, I say that again hesitating, but almost business as usual, then I think a clean audit report would be right there. I should perhaps also say audit reports are being signed all the time and the circumstances are changing. And as it looks from yesterday, more positive news from the government around the releasing of lockdown and no second wave at the moment. But it will need to be the circumstances at the time. And that's why I say that. So that's one end of the spectrum, a clean audit opinion. I am not going to cover where you might have a disagreement of opinion. So the other end of the spectrum that I want to talk about is where you might have a material uncertainty regarding going concern. And that would actually replace the going concern paragraph that you've seen previously in audit opinions. It's not a modified opinion, that's still technically a clean opinion, but it would be a change to that going concern paragraph. It, in essence, is referring to some wording that's included in accounting policies that are talking about what the material uncertainty is. So forecast, let me give an example, probably show an ability to live within the funding, but perhaps headroom is reasonably tight, or a fall or delay in sales might cause a banking covenant issue. Or maybe banking facilities are due to expire within 6 months, and whilst you expect renewal to happen, you are ongoing in terms of your discussions. So they might be examples where a material uncertainty exists. You would disclose it in accounting policies, and then the audit opinion would refer to that. And then the last one is probably in between the two. Again, not a modified opinion, and an emphasis of matter paragraph is not a new concept, although they definitely haven't been widely used and were probably rare, although not as rare as a disagreement of opinion. It's an additional paragraph like before, and it would refer to disclosures within the accounts, in essence drawing users of the accounts attention to something that needs, I suppose, a special mention. I think it's likely we see a lot of these. If you've got a good story to tell, you've got some sensible forecasts, but if the effects of the pandemic were greater than you predicted in your forecast, there would be a serious impact, then you would probably see one of these. Or another example might be that you are a construction company and as yet you're not able to restart, and so projects are delayed, and headroom may be available in facilities, but it would be used up reasonably quickly. And the last one where I can think it might be relevant is you're reliant on sending people abroad, and so travel restrictions of a second wave. I think in reality they are probably a lighter version than a material uncertainty, but I should definitely mention that if there's a material uncertainty, then you can't use an emphasis of matter. You would have to use your material uncertainty paragraph. And I did sit on a podcast from another accountancy firm a few weeks ago, and they were saying there was a rebuttable presumption that a material uncertainty paragraph would be included unless there was a very good reason otherwise. Although I should add that lockdown is definitely easing since then. Okay, I've rattled on a little bit. Let me try and sum up. You will need clear, supportable, documented forecasts, and you should sensitise those. You will need to bring it to life for the auditors, and inevitably there will be a lot of questions because they will need to pass their own judgment on those forecasts. Disclosures in the accounts are inevitable, whether you've got a clean audit opinion or whether you've got a material uncertainty. You would need to explain your assumptions. So disclosures are inevitable, but each assessment is definitely individual. For a clean audit opinion, you would definitely need a strong balance sheet. And I should mention again that reverse stress testing concept, just as a different approach to going concern. I don't think it's an absolute given of a material uncertainty, but it's definite that we will see audit opinions with additional paragraphs. Okay, I've been talking about audits a lot, and I think that probably covers audit reports. Of course, if there's anything you wanted to know that I've not covered, ask it, and I will then be able to answer it. But let's have a look at remote audits. My life right now is a remote audit, but I've been allowed out today, as you saw. I'm in the office. So I am living on Teams. We are doing all of our remote working primarily on Teams, and that is proving to be really useful for us. I'll try not to say too much because I'm mindful in a moment that in Steve's remote working section, he's actually going to give us a little demo. I'm not sure it's actually a demo, probably shoot me for that. But anyway, he'll show you Teams. But we're still really wanting to work with our clients as a partnership. So we know relationships are important. And whilst it's harder to do them over video calls when you've never met somebody, we are still doing that. we're just mindful that us calling regularly can be disruptive. So we're making sure that we're working together with clients so that when we are calling, it's at an arranged time. People have got childcare to deal with as well as remote working. So it's a case of agreeing together the best way of working. And we've been quite lucky in some ways that we'd already done some of our audits remotely, in part or in full, for a couple of years. So a soft landing for this pandemic, I suppose. But it's definitely a different way of working. And I'm sure most of us are over the cringy video calls now from the beginning of March that we all started to experience, but it's still a different way of working. And if you're not that techie, then yes, there is some tech to learn, but it's quite intuitive. Using Teams for us, with it being a Microsoft platform, means that even if you've never used it, there's an air of familiarity around it. But it does mean definitely that you can reduce your email traffic. So if you haven't got a decent remote working platform, I would strongly suggest giving Teams a go. In terms of getting ready for your remote audit, it's a case of being prepared, because of course we will ask for it all to be uploaded where you can. That doesn't mean we can't exchange some real documents if we need to, but we would need to do that safely. So at the moment, my life is a remote audit. That includes us attending stock takes remotely, using video calls with clients. I said I'd try not to say too much, and I'm mindful I've already said quite a lot, and Steve's got a demo for us. So I'm mindful of time. I'll perhaps call it a day there, but if anybody wants to ask any questions as to how we are doing remote audits, I'll be very happy to answer them. Perhaps now's the time to see if we've got any questions, Steve.
Hey, yeah, we do have some questions. We've got some in now. So we have a question from Paul. How will external property valuations at the 31st of 12/19 be viewed by auditors when signing off accounts around now? So this came in quite early on in your talk.
Just recap slightly, you spoke really quickly, but a property valuation done at December 19, did you say?
Yes, December 19. How will that be viewed by auditors when signing off accounts around now?
Yeah, okay. So when we revisit assets, we do that with the conditions that existed at the balance sheet date. So if that's a valuation that was done at the time, that is the valuation that we should start there. I think we do need to be mindful, though, that in terms of post-balance sheet events, it will depend upon where you are sat in terms of reliance on China. If that's not relevant, then that is the valuation, but I think we would need then to consider disclosures around what's happened since, but you wouldn't adjust the numbers.
Okay, cool. So, and if any time we answer any of these questions and people want to adjust the question, or I've not asked it properly, then please just ask the question again. We have one from Kate. She has asked, any suggestion over the period that grant income should be released against?
Yeah, I can answer that. It depends what it relates to. So if you've got grant income, you need to match it to what it relates to. So in the example, I spoke about the job retention scheme. So if you've had a claim for April, then that April claim in needs to be matched to your April wages. So you'd recognise it in April. So in essence, it's about matching it to what it relates to.
All right, really good. Now there's every chance I'll mess this question up, so I'll take my time and get it right. So CJRS is going to come under huge scrutiny from HMRC. If I'm uncertain that the claim is 100% correct, can I hold back any of the grant just in case, as it's 100% certain I won't be getting this? And that's from Stephen.
Okay, Steve, how do you feel about us asking Mark to answer that, even though nobody's met Mark yet?
Yeah, let's throw him on. Let's do it. This is
Sorry,
great.
Mark.
So, Mark, you are coming in.
Afternoon, everybody. I think you're right. It is going to come under huge scrutiny, as we'll see later. I think holding it back is obviously very prudent in that approach. I think it's just making sure you're checking your claims. Look back at the guidance, make sure you're keeping notes of the guidance that you've based your claims upon. There's also the question of sort of interest and penalties that may need providing against. But I don't know, Ali, from an accounting point of view, would you be holding any of that back unless you've got a specific concern? I wouldn't have thought you would you?
No, I don't think so. I think if you're concerned about whether you should have claimed it, then you probably want to be addressing it at the time and not waiting for the auditors to arrive. You could ask your auditor to review your claim and consider your employees that you've claimed for against the eligibility criteria. If you want some confidence, I suppose that's something you could look to reach out for. I guess I'm not sure why you might not be 100% certain if your employees are not working, and there are various eligibility criteria that I won't try and pick them all off the top of my head, but we all know the 19th of March is a key one, and on previous RTI payroll reports is another, and they're not working, then you're eligible. If you want to take that offline and you want to get in touch with us, then I'm very happy to try and help with that. But not working on your payroll, issued with the appropriate documentation, then you shouldn't have a doubt, I suppose, is where I'm thinking my answer is.
Yeah, I'd agree with that. I think it's a case of if you've got a specific concern, I would address it now. If it's just more a general, yeah, this is complex, it's changed quite quickly, then that's difficult to protect against and predict, isn't it? Other than getting an independent review, which we've certainly been doing for a number of clients, just to double check where they're getting to. But obviously, if it's a specific concern, then I would really address that now rather than later.
Okay, fantastic. So that's all the questions done. And like I say, if I've mashed up the questions or somebody needs to re-ask it to get another answer, by all means, just throw them back in. So yeah, let's take Mark back off.
Thanks, Mark.
No problem.
Yeah, I think we can hand over to Steve to talk about remote working.
Hi, everyone. Hopefully everybody can hear me okay. So, yeah, thanks for that, Ali, and for that as well, Mark. So what I'm going to talk to you about today is, as Ali said, remote working. So I was slightly distracted by a very large picture of my own face there, but I've got my notes up now. So yeah, my name's Steve Brooks. I'm a consultancy director here at CPIT. And really what I want to talk to you about today is yeah, the concept of kind of remote working, but also some thoughts around kind of how the lockdown sort of was implemented, and then and how remote working was implemented. Sorry, just trying to drag these things out of the way. What the impact of it has been, and what you can do to kind of ensure working from home and this whole remote working concept is successful for as long as you kind of want or need for it to continue. It's been, you know, a little while since our business resilience webinar. Hopefully some of you were able to join us on that. But my session there was really about kind of preparation for getting your processes in order. We wanted to make sure that you could carry on as quickly as possible. And, you know, I think it's too early to suggest that that dust has settled, but we're certainly in a period of transition now to a new normal. You know, we heard yesterday that we've got this new kind of 1 meter plus 2 meters if you can. And you know, it's given us some time to think about what this might look like and how we ensure business processes and that kind of whole working from home culture are more robust than perhaps the slightly more kind of quick and dirty options that we kind of had to put in from day one of lockdown. Now, not everybody's going to be able to have all of their staff back in the office at once. So I think it's really important to think about slightly longer term strategies to meet these rules. So, you know, previously I've kind of touched on things like collaboration and business processes and changed working arrangements. Today, what I want to think about more is how prepared were finance teams for remote working? What could you do to improve efficiency and contingency planning for whatever uncertainties we face, in the kind of coming weeks and months. And then, building on Ali's point really there, how do you make sure that you're still producing the right quality of things like audit evidence, and how do we get processes in place to make sure that that's easy to do? So let me just change slides here. Yeah, this is I guess perhaps sums up the two extremes of kind of preparedness. In our experience from talking with clients, there's been a real range of preparedness. I think some businesses were inherently in a more difficult situation than others. Those with factories or field engineers, they were spending a lot of time working out how to deal with their, if you like, operational staff, wondering whether they'd have to shut their doors completely. Others were, I guess, a bit better positioned. So consultancy and service-based organizations were a little bit, I think they may have found it easier to prepare to work remotely. But these are kind of rules of thumb. It wasn't always the case. And I think some finance teams struggle to work from home regardless of the industry. And for me, a lot of that, what we're seeing is that it's to do with old systems and old processes. Sometimes it's to do with the different kind of divisions and departments in a business. The guidance to work from home if you can meant that operations staff were in the office, but and finance were kind of trying to support them remotely. But like I said, systems and processes was a big part of it. I personally, and I think we as a business, kind of bang the drum a lot, but the finance system is very often the last one to be updated. It's the last one to be reviewed. It's the one that's kind of left in the corner with the same setup it had since 2010, when we were in a very different kind of world. And for saying it is so important, that finance team doesn't often get the attention to systems and processes that it deserves by the rest of the business. And so for many customers, what we've seen, for many kind of clients, we've seen that access has been the main issue. That's typically been in two key areas. The system itself is one. Often it's very sort of server-based, sitting what we call on-premise. That's often something like Exchequer, Sage 50, Pegasus Opera. And your finance team might have found it very difficult to access the system. They've perhaps had to dial in to the corporate network using something like a VPN or something like Citrix. This can be really slow, and it might only allow a kind of finite or fixed number of people onto the system at one time. And that can be painful. That's fine if you're kind of working from home one Saturday, but I'm sure for some of you that's been pretty tough over the last 12 weeks. And if that's not an issue, occasionally one of the things that we also see is in the supporting documentation and the supporting systems. So businesses where they're very paper-based, there might have been a process involving paper copies of invoices going into box files. We see that in particular in purchase ledger, just because the volume of data that they get in. And that would have been particularly difficult to change with the move to working from home. Sometimes we see also as well that maybe the documents themselves are scanned in, but they're saved on a name drive, an F drive, a G drive, a Z drive, or whatever, which again is kind of coming back to that access point. That's difficult to kind of dial into, just like the finance system. So we'll look at how to address those 2 points specifically. And then I think we also need to look at collaboration and productivity. The visibility of who's working on what and how they're getting on is very difficult in remote working, particularly without the right tools and processes. And so, although I don't think we should go as far as kind of software on people's machines to see what they're up to, I do think that if you're just using email and phone calls to check in, it is tough to gauge how well things are working and what the output level of your team is. And combine that with that point around documentation and availability of documentation, you're kind of really losing a lot of visibility that you may have had when you were office-based, and it can be very hard to work on kind of shared things like the management accounts, for example. And then, there's a cultural piece as well on that collaboration side of things, where communicating with the team, particularly as, on this call, FDs, FCs, it can be tough for your team to always know what's going on, how things are going on, what's going to happen to their job, what's happening to the business. And again, an all users email is fine. It's certainly better than nothing, but I'd like to think about, is it the best way of doing things? And then last but not least, to consider is, very much linked to Ali's section in this seminar. How are you going to make sure that the issues that I've just talked about unprepared systems and processes are gonna still make sure that you've got the right evidence available. And I think, you know, it's not likely, although who thought it was likely in the first place, it's not likely we're going to go kind of into another lockdown as far as I'm aware, but there is going to be a level of working from home for the future, and we don't want you to be at the mercy of your systems and processes if this happens. So I guess as I go through the next few minutes and the next few slides, I'd really like you to think about how what I've just talked about applied or didn't apply to your business, and consider how well placed you were to handle remote working. Because like I said, we've seen a real kind of variance in kind of how people have got on. So really what we want to think about is, you know, how do you move from this kind of office-based environment to working from anywhere, you know, on the beach, or to the very least just at home, you know, successfully working from wherever you need to and wherever your team needs to. So I think first of all, let's look at system access. I really don't feel now like there's any good reason not to move your systems to the cloud. That point around VPNs or physically being in the office or having some sort of Citrix server, I don't really understand why those sort of are sort of still in place, particularly at the SMB level. I think previously people suggested cost was a factor, but you know, you'll see from the slide on screen, there's so many different systems out there. There's one for all requirements, all budgets. And I think another thing that's worth mentioning is that, you know, these cloud systems do offer so many productivity gains over their kind of legacy counterparts that the return on investment is very short. And when departments are running leaner now than ever before, that's a really crucial point. It's how you can do the jobs that you need doing quicker that will very rapidly return on that investment. And I've said this before on webinars, but I do think it bears repeating. You know, we are at CPIT a Microsoft partner for good reason. In our view, there isn't a better solution for SMBs. And if you come away from this webinar thinking, great, I need to contact for a kind of cloud finance system, happy days. But very much the next best alternative is knowing that if you come away from this thinking, actually, I can move my system to the cloud, whether that's with us or not, that would be great. I genuinely don't know why you would make your next system move to be on premise. And even if you're not considering one, I'd strongly urge you to think about, well, is that access point holding you back and holding your business back? And just to kind of, I suppose, really kind of hammer this point home, I've got a sort of slightly tongue-in-cheek table, but to be honest, the pros for these kind of cloud-based systems so significantly outweigh those for on-premise. And to reiterate, that's for any system that's on the cloud, because they're always up to date. There's very little cost involved in ongoing upgrades. So compliance things that come out, things like making tax digital, or we've got clients in Germany and they're changing their VAT rate at the moment. You know, things like that, where you need to kind of go and draft your partner back in. You can reduce that reliance on a third party when you've got kind of no upgrade costs in a permanently updated system. There's minimal downtime. So again, you've not got to get somebody back into the office to kind of work out, oh, why is the system down? I was trying to kind of work and it's not worked. Somebody else is responsible for that uptime. And they are inherently more secure. I know that's a controversial point, but Microsoft alone spend $1 billion a year on security of their kind of data centers, and it's an unprecedented level of security that we just can't match here. We do a decent job here with our on-premise hosting for the customers that do still have it, but the level of technology that goes into the cloud environment is huge. And crucially, and relevant to today, it's about working from anywhere. Almost all these days, cloud systems have desktop apps, mobile apps, they have tablet apps. You can genuinely work from, lockdown notwithstanding, anywhere that you want. And I think really the only kind of points that are kind of advantageous to on-premise is that you've got a little bit more control. You aren't at the mercy of a third-party provider, but when we've got so many other things going on, we certainly see a lot of people that like to almost discharge that responsibility over that environment to the third party and focus on their team and how their team are working. So hopefully that's some food for thought on that point. And yeah, just for clarity, when I say cloud, I kind of mean software as a service rather than just putting your legacy system in an IT provider's data center down the road. That kind of still exposes you to the same hosting and upgrade costs. So you should be thinking about a true kind of cloud SaaS environment. And so if I just kind of shift on to that point around talking and teamwork and collaboration, and then also into that audit evidence side of things. More than ever, we have to be communicating well with our teams. When you can't physically see them, it's so much more important that there's not an assumption that everybody knows what's going on. So I'm sure this is happening already, but making sure your team knows what's happening, even if to you there's not actually that much to report. We see a lot of success with businesses that do that, and I think this quote here summarizes that nicely, that silence isn't golden, it's deadly in teamwork. I've already bastardized it even though it's on screen. And likewise, this, Ali touched on this, but email is, I think one of those areas where we very easily fall back into it. I was saying to Ali this morning that there was something that came through on email today that could easily have been handled over Teams, but it takes so long to manage, and it's such a kind of blunt tool, and when people are all over the place, it's tough to know who's working on what. And if we were able to hold a vote on here, I'd ask how many of you are using Office 365 already. Lights have just gone off, but I suggest it's quite a lot of you, and if you are, you've got Teams, Microsoft Teams already available to you. And so for those of you who don't know, it's Microsoft Teams is an all-in-one system for chat, messaging, file sharing, phone calls, video conferencing, and it can easily replace email for simple questions and things like all user updates. And it's built with Microsoft SharePoint kind of directly into it. So document storage and that point around G&H drives, that can all be shifted into Teams as well. So it almost becomes this hub to kind of join all of those different systems together. And we've used it for internal lockdown communication. We use it for remote audits, like Ali says. We use it for our implementations of new systems. And again, much like the cloud system, I don't think there's any reason not to be rolling this out. You should speak with your IT manager or IT director or IT provider about how to deploy it, because like I said, it's not got an extra cost if you've got Office 365. And there's a quick video, yeah, Ali graciously called it a demo, but that's probably bigged it up slightly. But I've got a quick video here that shows, in fact, just before I start that, I've got kind of this scenario where we've got Michael here, the FD, and we'll see later on how he invites somebody else to kind of work with him. But for now, you're just going to see, I have to kind of play on that again, that Michael's kind of logged in here, and Sarah in his team, he wants to kind of quickly chat to her. She's shared something. Rather than send an email to her, he's found her name in Teams, and you can see how easy it is to just start a conversation with somebody. So in this case, he's saying, hey, thanks for sharing this information on the system. That would ping her up a notification. I've got a screen kind of blocking my view here, but we can also do things like liking messages. Well, that's stopped again. Apologies. Great demonstration of technology. So like I said, ownability notwithstanding, Michael's messaged Sarah here, and he can then like her message, and other people can see who's liked what, and you can kind of create this, if you like, this ongoing conversation about what's kind of going on. And so again, when people aren't necessarily kind of visible to one another, you can see what's happened, you can like messages, you can kind of post kind of clips up, like GIFs up, memes to say this is, this is ideal. And we start to create almost on a kind of community, this kind of office kind of culture, if you like, but within Teams. You'll see here that we've got different teams for different activities that are going on in the business, so you don't get kind of clutter. And then you can also add lots of different tabs that link into other Microsoft products and non-Microsoft products within one team. So in this example here, we're saying, okay, well, this is all to do with the setup of our new system. How do I create a training request form to say what do we need to look at in terms of kind of training for other areas of the system. And so what's really neat about Teams is it's bringing lots of different areas of the system together. This sort of stuff is almost certainly held on spreadsheets, it's held in different databases, it might be held on Word documents, it's saved on G drives, there's no kind of master version of it. And that kind of hub concept is what I really like about Teams. It's what I find, if you like, the most effective part of it. A lot of this stuff stands alone really nicely as well, but Teams is the way of bringing it all together. So here, yes, we've very quickly said, what would you like to see in our next training session? And then you'd be able to kind of push that out to your team and they could kind of collaborate, fill in the survey, and then you get a good gauge for where, you know, people need more knowledge. And that's just one small example of the sort of thing that, that you can do. And then I'll just show there that that would actually notify everybody else. And so touching kind of there also on or moving on rather onto the audit evidences, audit evidence side of things. We've got another video to look at, and in this scenario, I said we've got Michael, that finance director, who's now going to invite me, Steve, in as guest auditor. So hopefully I won't make the same mistake as last time. So on the right hand side here, we've got Michael. On the left hand side, we've got screen. You can see that Michael has added Steve in as a guest. And then building on that idea that SharePoint sits in behind everything, rather than using the G drive and an H drive, what Michael's done as FD is he's drag dropped an Excel spreadsheet into the team. He's renamed it and said it's the consolidated income statement for audit. He's then going to message the auditor who's in as a guest. You can use the @ sign to immediately notify them and say, hey, I've uploaded the consolidated P&L. And then as soon as that message is sent, it comes through to the auditor. And now what's really cool about this is, you know, that is them as a guest user. So they'll still get notifications. They'll still say that, you know, that somebody sort of outside your environment has kind of mentioned you in a comment. And then we can both go in as FD and auditor to the document that's been uploaded. And this completely does away with that whole, you know, this document is locked for editing. Would you like to open in read-only mode, or notify me when it's available? Which, again, coming back to the idea of documentation and things like that, I'm sure some of you have experienced, and you've got to kind of try and share these documents, but you're not quite sure who's done with it. So you save a version 2 and then try and merge the changes together later. Hopefully some of you are using this stuff already, in which case, you know, great, and I'd encourage you to continue and think about bringing it into Teams. But for those of you who haven't seen it before, I think this could be a really powerful tool. And in this case, what Michael's saying as FD is, I know there's a number here that we're going to want to talk about. Brave maybe to bring it straight to the auditor's attention, but we can talk this through when we meet. And we're both in the document at the same time. Steve can then see that Michael's made a comment on this particular field. And he says, yeah, great, absolutely. That's one of the things that we can go through. And so, you know, we are just at the end of a phone call anyway. With a lot of this stuff, you can have almost a live conversation, looking at how, looking at the numbers, you know, almost as if you were face to face, or certainly doing a lot of the kind of the prep work. And then just again, coming back to this audit evidence point, it's been, yeah, kind of 8 years or so since I did any auditing, but I don't think the benchmark for audit evidence and quality has been dropped because of coronavirus, and certainly kind of, you know, based on what Ali was saying, the going concern rules and all of that is still very much in effect. And I think it's also important to recognize the time delay, because if you had a February year end, say, it might be kind of deep into summer 2021 when you're asked to evidence the following of the processes during lockdown. And so it's really important to make sure that your processes are up to speed. And if we take something simple like purchase invoices, some people's process involves physically signing documents, and I'm guessing maybe you could do that in lockdown with a series of signatures and then either photos or scans, or then emailing the scan to the next person in the chain who would print it and sign it, which I guess is okay, and it's certainly better than doing nothing, but it's not very scalable and it's a bit clunky. So I think, again, the time is right to now be thinking about, are my processes compatible with the kind of short to medium term future of not having everybody in one place? Because it is really important that those kind of that kind of control environment still exists, because the scrutiny will still be there just as it would in any other year and in any other audit. This short video here just shows how that kind of process could be digitized. So you've got an example here of somebody requesting an approval on a purchase invoice. That immediately sends through a email to the finance controller, finance director, whoever it is, the next person in that authorization chain. They can say, yeah, great, I can approve that spend, and if this was a longer video, go into the system maybe and actually kind of review it. But you can see, I mean, this just loops now, but you can see how short a process that actually is. I've got a document that needs approving. I hit request approval, wait till that approval comes back. Meanwhile, somebody gets an email immediately and says, yeah, fine, okay, that's a standard invoice. I'm expecting that to come in. And again, that's job done. And it's that sort of thing, and kind of coming back to that point around return on investment. If you are having to work with fewer people through furlough or whatever it is, we don't want to create extra work or kind of have to struggle with kind of old school processes. I think I'll just kind of check in with Ali on that point. Ali, how does that sound? Is it right to say you'll still be looking to that kind of quality and evidence and making sure everything's been followed? I'm a bit wary of dishing out of-date advice.
If you want to come back to audit, Steve, just say. Yeah. No, you're right. There is no let up in audit quality or evidence. So I'm very happy for it to be digitized, but processes, control environment will get looked at in the same way that we always have.
Great, thanks. So I think, with that in mind, it is important that we don't sort of use lockdown as a period where there was 3 months of just kind of riding roughshod over those processes. Is that kind of fair to say?
Yeah, definitely fair to say.
Yeah, cool. So I guess for me, I'll kind of wrap up there. Thank you, Ali. I mean, we've looked at sort of systems access and supporting documentation, along with collaboration, and those were the key issues in getting up and running in lockdown. Now that we've got more time to look at how things like a cloud system and Teams can allow you to kind of bring your business into a slightly more prepared position, it's definitely the right time to do it. So I'd encourage you to focus on the simple things like a Teams rollout immediately, and make a slightly longer term plan when the time is right for a move to the cloud in finance, because I do think it will make your lives massively easier, pay dividends, and keep your business more agile as we respond to this kind of crazy pandemic and the impact it's having on all of us. So yeah, thank you for that. Are there any questions at all, Steve?
Yeah, we've got a couple of questions in, and we've got a couple of statements, which is brilliant. So Claire wanted to let us know that they changed their server base to a cloud base on the 1st of April during lockdown, which meant it made their life so much easier. And she didn't think they'd be able to keep up to date if they remained on the old system. And Rachel said something similar with, so glad we moved to Business Central last year. Remote working is so much easier. Also, having 2 remote audits during lockdown using Teams and SharePoint has made it so much more efficient. So that's great that people are sharing that with us.
Yeah, ideal. They sound like months, but I assure you they're not. I mean, that's great to hear. Thank you both for sharing that. Because
I've told them that the check is in the post.
Yeah, appreciate that. Absolutely.
Now we have a question from Paul. He said, "How do you add external people as contacts to Teams? It's good for people in your organisation, but not easy to communicate with others outside, even if they have Teams."
Yeah, okay, that's a good question, actually. So I do know how to do this because I had to do it to record that little video. So first things first, you need to speak to whoever is your administrator for your Office 365 and Teams environment, because there is a setting that allows guest users in the first place. So if that's not switched on, you won't even be able to paste somebody's email in to Teams to invite them in. So you have to just toggle that setting to allow guests, and then for them, for those IT managers who are kind of rightly security conscious, there's a whole load of very granular settings about what guests are allowed to do. And then once you've got that switched on, you can invite a guest in, and the guest can then participate in exactly the same way as if they were part of your company. There is, once you get invited into lots and lots of different domains, different other companies' environments, if you like, which is probably more of an issue for us rather than you as kind of FDs. There's a lot of kind of switching between environments, but once you're working, if we're coming into your environment as guests, we see the same things as your team, assuming you've given us permissions, and then it can be quite slick. So yeah, it's a very good question, because there is some setup involved and some settings to switch on, but once that's happened, it's quite a slick experience. But it's something that Microsoft keep on changing. We've seen just in lockdown alone, moving from only being able to have 4 other people on the screen for video to now it being 9, and I think Microsoft are working on 72. So we've seen a huge push in the development side of things from Microsoft on improving Teams, because they know how many people are using it. So it's kind of continually changing, and I think that guest experience is one that keeps on improving as well.
Cool. Now, Steve, I know we've got to move over quite quickly, but these 2 questions I think are going to be answered quite quickly. From John, can Teams be used on my mobile or tablet?
Yep, absolutely.
And Gloria wants to know, what were you using just for the invoice sign-off?
For the invoice sign-off, so that was using workflows in Business Central. So you connect Business Central to Microsoft Flow, which again is free as part of Office 365. It's now been renamed to Power Automate, but that's a slightly old video. Workflows is inherently built into Business Central, and you can hook them up to Microsoft Flow. And when you click request approval, there's some setup in the background that will trigger who to send that approval through to. But certainly happy to take that offline in more detail if you want to talk that through a little bit more. But Power Automate and Business Central.
Okay, that's it. I think that's it for questions until we get to the Q&A. So it is good to let everyone know that we have got a Q&A section at the end if anybody has any more questions. But now I think we need to introduce Mark.
Yep, okay, over to Mark. Thanks very much.
Thanks, Steve. I think it's fair to say we've used Teams quite a lot pre-lockdown, but when lockdown happened, it was just seamless for us. So I think that's just testament to how it's worked for us as a business. Hello, I'm Mark Baxter. I'm a senior tax manager in the shareholder tax team at Cooper Parry, but recently I've been working in the COVID-19 team as well, focusing on the job retention scheme. Philip Rogers, one of our tax partners, was due to present today, but as I will let Philip explain himself, he can't be with us on the actual webinar, but he has recorded us a video, and I'll be here to answer any questions you've got in respect of any of the things he raises. Over to Philip.
So sorry I can't be with you today live and have had to pre-record this, but I'm heading down to Heathrow to pick up my son Angus, who is returning from a year in Australia. So very exciting. So talking about exciting things, I want to share with you some top tax tips. You have to say that very carefully. These broadly fall into 3 main areas. Firstly, how can you improve that all-important cash flow, something dear to most of our hearts? Then we will look at some planning opportunities, particularly whilst asset values and share values are depressed. And last, but by no means least, getting ready for what comes next, being the inevitable tax rises. So let's start with looking at ways to improve your business cash flow position. Starting with really the job retention scheme, furloughing, the new word that was being so widely talked about over the past few months. This has been an essential lifeline for many businesses, generous, quickly introduced by the government, and extended through to the end of October this year. There are a couple of points I wanted to flag around the job retention scheme. Firstly, are you confident that you have computed the claims correctly? As this is going to be an area that HMRC will look at keenly over the coming years, particularly for those employers who have furloughed a significant number of employees. Don't forget that the record keeping requirement around the scheme is 5 years rather than the normal 3 years, which would suggest that HMRC will have plenty of time to investigate claims in the future. The second point is on the ability to bring employees who have already been furloughed, and the cut-off date, remember for this, was the 10th of June, by the way, on a flexible basis, so part-time working and part furloughed. Now, many clients are looking at how best to bring furloughed workers back using this new flexible arrangement, but at the same time trying to be fair to the wider workforce, not forgetting those hard-working employees who have continued to work throughout on 100% pay and probably been asked to deliver a very full workload in the process. So invest some time in looking at the different options you have on this front, as I'm sure it will be time well invested. The next point is around corporation tax payments or repayments. If your business has suffered as a result of COVID-19, be it through reduced profitability or actually making trading losses, then you should carefully consider whether you could mitigate your corporation tax position by crystallising any trading losses at the earliest possible opportunity. It may be that by either extending or shortening your existing accounting period, this could reduce an upcoming corporation tax bill, or better still, actually generate a tax refund for HMRC. It's, for example, I think if you normally draw up your accounts to say 31 December, but trading has been significantly depressed for April, May and June this year, which I think will apply to many of us in this room, it may be appropriate to switch your accounting reference date to say 30 June 2020. And that's either by having an 18-month long period rather than to 31 December, or run a short 6-month period, so that the loss-making period either reduces the tax that you would have paid for the year to December 19, or generate a trading loss that can be carried back and give rise to a tax refund. There are clearly other important commercial considerations around changing your accounting reference date, but if you haven't looked at this as a possibility, then you should at least have it on the agenda to discuss. Linked nicely to the above is making sure that you're maximising the ability to claim research and development tax credits. Our experience from working with lots of clients in this area is that most are surprised by how wide the definition of R&D extends. The simple test is that if you try within your business to either change or improve a product or a process, the chances are that you're undertaking some R&D. This delivers some significant tax benefits, and it may be that by changing your accounting reference date so as to crystallise losses as soon as possible, as discussed in the above point, the timing of making an R&D claim should also be factored into this. The next point, paying HMRC. They're often a very big creditor, if not your biggest creditor. Many of you will have enjoyed the VAT holiday, but where do you stand in paying the other ongoing taxes, be that corporation tax, pay-as-you-earn, VAT, etc.? If your cash flow forecasting is highlighting some pinch points with regard to cash flow, bank covenants over the next 12 months, then having an early discussion with HMRC on a possible time to pay arrangement is seriously worth considering. Our experience is that provided you have some sensible cash flow forecasts and go to HMRC with a suggested payment plan, they are currently very amenable to granting time to pay arrangements. And certainly don't just bury your head in the sand and miss the payment deadline, as otherwise you'll be facing HMRC debt management team who can be far less helpful. I'm putting that politely. Before I forget, there is an automatic deferral for individuals of the 31 July 2020 self-assessment payments on account until the 31st of January 2021. So there's no need to elect or claim the deferral, and there's no interest or penalties. Now, HMRC's guidance suggests that individuals should pay the tax on 31 July if they can afford to do so, but it'd be fair to say that most of our clients are looking to take advantage of this 6-month interest-free deferral, so keep their powder dry. And just to dispel the misnomer that this only applies to self-assessment payments on trading partnership profit, no, it covers any self-assessment income tax payment that may arise from things such as bank interest, rental income, dividends, partnership profits, etc. So in this category, the last thing, a nice thing to do for those hard-working employees who have gone the extra mile over the past 3 or 4 months. What about electric cars? We've read a lot about that in the press. You get 100% corporation tax deduction. That's a pretty good start for new vehicles. And this relief has been extended right through now to April 2021, coupled with very, very low benefit in kind charges on the employee. So rather than paying bonuses, etc., which could be difficult from a cash flow point of view at this point in time, what about that new electric car? Food for thought. So moving on and look at some planning opportunities, particularly whilst asset and share values are depressed or may be depressed. Have you ever looked at introducing a share incentive scheme for your key employees to help retain and incentivize these individuals who may well play a key role in the next phase of growth recovery of your business? If your business has suffered as a result of COVID-19, then the cost of issuing shares or options to your employees could be lower at present. And it may be the perfect accolade for those employees rather than promising a large bonus when things get better. We've all heard that before, I'm sure. Certain schemes can be very flexible and tax efficient and tailored to your business needs, such as EMI and growth shares. So the message here is that it's probably a good time to revisit this, even if it was something you've put on the back burner. The next point is around de-risking assets. Are your crown jewels sitting somewhere in your business? And have you been worried about these over the past few months? This could be the trading premises that you own, surplus cash funds that you've built up. Generally, these types of assets within the company can have a negative impact on the availability of certain generous tax relief, such as business property relief for inheritance tax purposes and business asset disposal relief, which actually is the replacement for entrepreneurs relief, the old entrepreneurs relief. More importantly, if these assets are within your corporate structure, they may also be exposed to trading risk. The key action here is to look at whether you could restructure things in such a way to still retain the valuable tax relief, but to give you some commercial separation from the trade and the trading risk that comes with this. Linked to the above, should you or the key shareholders in your business revisit any succession and IHT planning at this time, while share values are likely to be depressed? Which may involve transferring shares and the use of trusts and that sort of thing. So we currently enjoy a really benign regime on this front, and this is certainly not going to get any better anytime soon. Which brings me nicely onto my final point, you'll be pleased to know. Getting ready for what comes next, tax rises or heaven forbid, new taxes. Ooh. Firstly, is your business structured in such a way so as to take advantage of the existing reliefs, which I referred to some of these above, including business property relief and the replacement for entrepreneurs relief, business asset disposal relief. That's a bit of a mouthful, but BADR, as I'm sure it'll get referred to. And it's not just about securing those existing reliefs. What if capital gains tax rates for individuals went up from 20% to say 30%? Not inconceivable. Should you look to trigger a capital gain now? Do you have cash and reserves in your business? Back to the days of advancing income to secure the known tax rates. I know it's not that palatable, but 38.1%, that's the rate you pay on dividends currently for additional rate taxpayers. Should you declare any dividends in the current tax year to 5 April 2021, will that be good enough to secure the existing rate before almost certainly income tax rates go up? It'd be fair to say that we are unlikely to see any tax rises being announced by the Chancellor in July. This is more about a spending review and how it can help kickstart the economy. But don't hang around and wait too long, as who knows what November might bring. I hope this gives you some food for thought and prompts you in putting some of these tips on your agendas to discuss over the coming months. We will be delighted to assist in this regard, and Steve will let you have necessary contact details at the end of the webinar. Thank you for listening, and hopefully, all being well, I will have successfully retrieved my son from Heathrow Airport. Thank you very much.
Thank you, Philip, for that. Steve, do we have any questions on the back of Philip's presentation?
Yes, we do. We've had one from Tina. She says EMI shares schemes. A client instigating one has found the rules attached to Sybil's loan affected the ability to do this. So I'm hoping that makes sense to you.
Yeah, I mean, I think it's fair to say that the Sybil's loans as such are obviously on preferential terms, and therefore what the government are hoping to do is to get payment back quickly, and therefore impact on what you can do in the meantime until those loans are repaid. So I don't think that's not surprising. I've not seen it on an EMI scheme because I've not come across that one, but it doesn't surprise me that there's those kind of restrictions in place.
Okay, so I'll just bring everybody else back in, not me. But what I will say is I did have a couple of messages from people saying that some people had trouble with the audio on the video. I think they were using phones, so I'm not sure about that, but rest assured that we will be sending the video for the whole webinar out again so people can then recap on the video. And we've done brilliant, I think, because we've managed to answer every question that's come in so far. So it's over to you, Ali.
Thanks, Steve. I've actually got a question on my WhatsApp from a client. Can we ask that?
You can do what you want, Ali. You're in charge.
I knew that was the case, really, Steve. Okay, I'm going to read this out, Mark, but it's definitely coming your way because it's furlough related. It says it's complicated from the 1st of July and there's a reference to maximum claims for the number of employees. Can you elaborate?
Yeah, I think it's fair to say July count claims are probably going to be the most complex of any month of the furlough scheme, particularly if you're bringing back employees part-time or topping up wages, or there's some sort of salary sacrifice arrangement. I think the point that's being referred to then is from the 1st of July, there is a restriction on the number of people you can claim in any claim period to being the total number of people you've claimed in any previous claim period prior to that date. Now, that might impact on you depending on what your claim periods are, because if you're bringing people back in on a weekly basis and claiming on a weekly basis, at any point you may only be, say, claiming for 20, but despite having furloughed a lot more than 20 over different weeks, but limited it, particularly if you've got, say, shift A and shift B and you're furloughing them on sort of 3-week rotation, that may be a limitation on your claim because you'd be limited to that 20, whereas you might want to furlough 40, for example, post, but you won't be able to.
So if you'd claimed on a monthly basis, not a weekly basis, you'd be able to then claim, in your example, 60?
Well, it depends on who's been off when. So if you had a 4-week period, and in the first 3-week period you had 20 off, but in the final week you had another 40 off, then in that example, that month's claim would have those first 20, the other 40, so the claim would have been for 60 people for that month. That's your limit. But if you were claiming weekly, your limit would be the 40 because that would have been week 4 out of that basis.
Yeah. Okay. Thank you for that, Mark. Steve, if we haven't got any more questions about On Track for 90 minutes, we'll wrap up.
No more questions, but what we will do is we'll take all the questions that were asked, we'll send them out to you guys and get you to answer them all again, and we will be sending that out to everybody alongside the video recording for this as well.
Okay, I'll feed that one in that I just asked then. Great, so thank you everybody for joining us. That's it for today. As Steve says, answers to the questions will follow. Take care, everybody. Bye.
Thank you.
Bye.
Bye.